Hello guys, welcome to the Trading Parrot. This is the third episode in the series of how to use RSI, Relative Strength Index. In the first episode, we already covered what is RSI, where to find it, how to configure it, how do most people use it for trading versus how do we use it in this channel. The concept of momentum precedes price, stay 2 steps ahead of what the price is going to do is all covered in the first episode. The second episode covered divergences, reverse RSI, where we forecast a specific value of RSI, where is it going to go in the price. In the second episode, we also cover bullish versus bearish structures, identifying the trend using the RSI. And this is the third episode, and we're gonna step up the game and start talking a little bit more into RSI trendline breakouts, sniper entries, a bit of my own take on how I use RSI. For example, when I talk about a global versus a local breakout, multi-layers of breakouts. And depending how are we doing on time, I don't want the video to get too long, but if we can squeeze a bit more, we might be able to cover as well risk management using RSI. If you haven't watched this series of videos containing multiple trading tutorials for free, all available directly on YouTube, we have already 8 videos with specific tutorials of different indicators, including CPR, monthly, trading different liquidation pools, super trend, Cerberus, the Hive, and many more to come in the future. You can find them very easily if you go to youtube.com to the Trading Parrot landing page and you flip into playlists. Underneath this tab, you're going to find a playlist called Trading Tutorials, this one in here. Guys, if you like this type of content, make sure that you are subscribed to the channel, hit the notification bell so you get notified every time I put out one of these videos. And I would really appreciate if you hit the like on this video so it can get to more people. Alright, let's get started with the breakouts from RSI. In this particular video, I won't show you automated ways of placing trend lines, although I think you can get some of them to automate the process. Personally, I have found that it's much better combination to spend hours, days, weeks practicing your technique for these entries rather than just relying on an automated tool that has very limited accuracy. Indeed, it's not that it's not accurate, but it doesn't have any experience. And I think the point in here is if you're gonna trade with RSI, you have to put together your own experience with RSI together with the confluence with other indicators. And automated setups fail on that. And you know how much I love automation, but at the end of the day, I trust my judgment, my bias, experience, and more than anything, my gut feeling. So in order to get us there, I'm gonna show you what I did to become better at RSI. I remind you that I started using RSI as an excuse to simplify my trading, to have a common ground to speak to people that are watching my videos. Initially, I was overcomplicating things, putting too many parameters, creating custom indicators, and that was putting people off. But when I started just focusing on something simple like RSI or MACD or a moving average, many people can refer to that because people have their own experience and background with RSI. So we have a common language. Eventually, I became good at trading with RSI, but at some point, I have no clue how to use it too. So I'm gonna tell you what I did when it comes to breakouts. And pretty much I load any asset on any time frame and put a naked RSI in the chart. And I start scrolling down, scrolling to the left, to the past, trying to see pronounced moves in a certain direction. Don't look too much into the micro detail in an area very small. Try to see it with your eyes from the distance and try to see if some patterns start emerging. It doesn't matter what you find initially. It can be anything. For example, that these 3 things are touching there. A condition to get good at this is to practice spotting patterns with naked eye. For example, this one in here. You can see that there is kind of a line going in there. Or for example, if you hit this area in here, you can move the line once you have already anchored the trend line there and try to see what makes more sense. For example, touching there or touching here. This is just the first stage to identify potential trend lines that could offer a good quality breakout. The breakout is the moment when the RSI breaks above the trend line, as simple as that. But you can also have fakeouts. For example, if you had the line in here and you place the line around the 9th of April, you will see that the RSI continues to stay below it, but on the 23rd of April, you see a breakout above the trend line, but then it comes back down into the previous range, which is below the trend line, and that is what constitutes a fakeout. This is probably the main reason why people are saying you must be crazy to be trading RSI, you're just gonna get wrecked. And we can cover a little bit of risk management later in the video, how to handle situations like this, assuming that you are on the 22nd of April and you don't know that this is going to be a fake out. How can you protect your account against this dump using stop losses or DCAing or different methods? In general, what I'm looking for when the price is going up is for a trend line that finds supports. So let me move this out of the way and let's imagine that the RSI is doing something like this and the price is going up. So typically what I'm gonna be looking for is to place the trend line something like this, trying to find the most confluence, the most touches, and ideally that nothing stands from the lower end. If it does, for example, if we were like this, then we have to readjust the trend line until we see that everything is still above the trend line. This is just for an uptrend. In a downtrend, is the opposite. In a downtrend, you're gonna see the RSI coming lower and lower, and we're gonna place the trend line above the RSI, and we're gonna try to make sure that the trend line gets in touch with multiple points so we can find the area where it could break out. But let's focus on this one. This is an uptrend. When the RSI continues to stay above the trend line, not crossing it below, we are still on the hunt for a breakdown. And the longer that this area is, we're gonna say that we have better quality. For example, if we just have something like this, and you place your trend line like that, and this breaks down there, versus this breakdown on the left-hand side of the screen, we can say that the quality on the left-hand side is higher than on the right-hand side. And that is just purely because this has done a full range of the RSI. There's a lot of tension in this move to make a swing low. Why? Because it's been just for too long going like this. Every time the support held, it accumulates more energy. Think about it like a spring. Every time the price bounces on support, you're gonna compress a little bit more the spring and a little bit more the spring. Eventually, if you get to an RSI of hypothetically 100 in an uptrend, it's almost like compressing the spring so much that it's gonna just blow in your face and take out an eye. And that's pretty much it. Can it stay at 100? Yes, it can, but it's very low likely. Whereas this is like you just compress it like this and you're betting that the person won't be able to hold the spring with just compressing 2 centimeters, and you already know that this can be compressed a lot further. So that's kind of the analogy, I will say. Once the breakout is confirmed with a candle close, that is a must, we look for 2 things. We look for a test of the resistance and further continuation down, and we expect that to have higher likelihood the longer the move was. In this case, it's a very long move, let's say from 20 to 80 in the RSI. So in this case, we say it's a high quality setup, and we are going to bet that price is either gonna go straight down or it's gonna retest and go lower. Of course, nothing in trading is guaranteed, so the RSI could potentially re-enter the previous range. And then we can say that we are having a fake out. If it does this intra-candle price action, not closing the candle there, in this case we are in the daily time frame in the chart. So let's assume it's 4 p.m. and the RSI has crossed back above the range. Then we cannot do much, really, because this move might be just an intra-candle, and by the end of the day, maybe it closes still below the resistance. We don't know. Unfortunately, on a daily time frame, you're gonna have to wait for longer. If this was the 15-minute time frame and you're faking out intra-candle there, let's say in the first 7 minutes this candle goes back above it, that is still not a fake out until the 15-minute candle closes with this RSI above the trend line. Even if this closes there above the trend line, the price action might continue going higher. And if you watch my previous video, you should be thinking right now that this is a bearish divergence, right? Because we put a low on the RSI and we put a high on the price. So that is still bearish, but is less bearish if this close wasn't a fake out. Of course, we prefer, number one, a move down right after the confirmation of this candle close. Or less bullish, less bearish, but still quite bearish, is a retest in here closing below the trend line. And then less bearish if it fakes out and closes in here. If it puts a high on the RSI, then it's a complete disaster for a short. So let's do the exercise of identifying things. For example, here you get a setup. Pretty cool because it breaks out there and then it comes back and it puts a higher high with a hidden bullish divergence. At this point in time, the price continues to go lower. So risk management is a must. Here we have another short that looks pretty juicy. Think about this. On the 17th of August of 2022, you are in a bear market and you have 1, 2, 3 touches and a breakdown. You close right there with RSI 51. Right after that, you get a move of 19% to the downside. So that's a great setup. Here, there's another one, but this one is a little bit more tricky because even though you get all these bounces, you produce a bearish divergence but still not a breakout. The bearish divergence is probably confirmed in this candle at RSI 55. In the next RSI, you close already at 36. So you are already moving to $18.5 thousand. So technically, the candle close will be there and you have already moved into support. So I have to admit that this setup is a little bit tricky because right at support, entering in here, assuming that there's further downside, is quite risky with an RSI of 36. If you did enter there on a short based on this breakdown, you still have an additional move of 16% to the downside at the cost of a higher risk. I would have preferred that the breakdown was smaller in here, something like this, at 47 to enter right after having all these touches. Coming back down so low and confirming so far from the breakout area is not my preference. If you watch my videos daily on TA, I tend to share a lot of thoughts and a lot of ideas about this. And I tend to combine as well RSI with other indicators. Those indicators give me the bias. I use RSI mostly as the final sniper entry once I have already identified some sort of edge that tells me we should be going in this direction very soon, reverting. I also pay loads of attention to the multi-time frame. You might see me very frequently trading on the 4-hour time frame on RSI because that is the microscopic definition that I want to see for when or under which conditions I'm going to put the trade. But for example, if on the weekly we have confirmed here a breakdown of this support, then I take mental note that the weekly is showing weakness. And since I know that the weekly is like a dinosaur that moves very slow, I might still get away with taking 1 or 2 longs with very quick exit. And I think that is the key. If I'm gonna trade against a higher time frame that is weakening for longs, for example, then I either take shorts or my longs have a smaller target, a more conservative one. I look into the weekly time frame and I identify the breakouts on the weekly, and that tells me a lot of what's to come in the next months. But within that time span of months, we can look for longs and shorts as well. We just need to take that mental note that the weekly might be still not ready. And if you've been watching my videos all the way from 73 up until today, we have taken loads of longs and shorts regardless of what was going on the weekly, but never ignoring it. On a weekly time frame, at bottoms of the range, of course, we can afford to appreciate that we are next to support and use the 4-hour RSI as a magnifier glass to take that sniper final entry with surgery precision. And the same for the tops, looking for shorting areas at the highs of the range. The RSI can be used in many ways. One of my favorites has always been the breakout, but that doesn't mean it's the only way. There are other things that we can use as well. If we notice that the RSI is within a channel, that is a very valid observation, and it can provide huge value if identified in a timely way. For example, after having this touch, then this high, and then this low, we start placing this line, and right after bottoming seeing in here, we connected this with the next high and we started talking about that channel right there. And that was really, really great way of spotting that this area in here, if holding, it could be a great support. And notice that we are not even looking at the price action. The price action in that area doesn't even look to be in a channel. It's just going slightly up in here and then sideways in there. But it is in the RSI where we can appreciate that kind of under the hood behavior. What is a global breakout and a local breakout? A global versus a local breakout is just a couple of terms that I use to explain what I'm meaning to people, but it doesn't really exist, at least that I know. And I use it to refer to the nature of the breakout. For example, here we have a top, a local top, and we can place a trend line like this. And then we have a breakout and a retest right there. After that, it continues just for one impulsive move and then it comes back down. So what do you think? Is this a local or a global breakout? What does it tell you your intuition? In my opinion, this is a local breakout. Why? Because there is a higher high right behind this local top. And if we connect these two levels and we place it like this, we're kind of forced to say that we have a global breakout to wait until we see this breakout, which is pretty late. And there's always a component of a trade-off in here. Sometimes waiting for the global breakout is an overkill and you pretty much miss the whole rally. And sometimes taking the local one, the one that doesn't come from the actual local top in here, which is this one, at least in this vicinity, is not necessarily gonna give you the final bottom. Like you can see in here, after this test, we go higher but just slightly. And from there, or at least from the entry point, which will be roughly around there, you have to still stomach 12% down. In this particular example, none of the breakouts are really good. Going to the next one, we can see that we have in here a breakout confirmed at this price. That is a local breakout. And the global one is like this, that has some sort of retest in here and is also not providing a great entry. We're of course on the daily time frame and the price is just going sideways. That's why we're gonna get very frustrated to try to trade on the daily time frame Bitcoin in an area where the price is not really going anywhere. It's just bouncing from each end over and over again. And I guess that brings the other idea. You need to find a time frame that can provide you with enough room to move. If you are on a daily time frame and on the daily time frame you're going sideways, trying to find the breakout area can provide loads of fakeouts. And that's why in the past 8 months we are using the 4-hour and we're trying to look for support to find those entries as opposed to getting obsessed with the daily time frame. And yes, the daily time frame, if we find the final breakout that takes Bitcoin above this range, we can be really excited. Let's try to find the one that broke out in October of 2023. And that was probably this global breakout, the one that we have right here, where still the RSI is below resistance, rejection in here, that peak at 27,900 is another rejection, and the actual breakout is on 15th of September. Look how interesting is this. So you have the breakout at this point where the price is going sideways, but the RSI is already saying, I'm ready to go. And guess what? At this point, very little amount of people are entering along. Most of the people will end up entering in here because they start seeing the big green candles and they fear of missing out. But this is a great example of exiting an area of sideways that did work on the daily time frame. One of the indicators I like to combine the most with RSI, and not the only one, but definitely provides an additional edge to RSI itself, is to look at the liquidity pools. In this video, we won't cover liquidity pools. Make sure to go to my tutorials because there's already one there, Trading Different, Review and Comparison with Competitors. That is also part of the Trading Tutorials playlist. Have a look at that. It's less than 10 minutes and it's going to show you how to use this. But in a nutshell, if RSI is calling for a breakout and there is no motivation to go higher, I tend to become a little bit skeptical of the breakout, particularly if I see on the opposite side liquidity accumulating on the heavy end. Guys, I hope you enjoyed the tutorial. This is the last episode of the series of RSI. Let me know in the comments if I missed part of it. If there is any suggestion, I might consider do a 4th episode as well. If you want to trade with RSI and with all the indicators I do, I recommend using Bybit. There's 30,000 in rewards depending on trading volume and the lowest fees if you use the link in the description. This is a great exchange that I use for my bots and for my manual trading, but you will need to use KYC and potentially a VPN. If you don't want to do that, if you don't want to use any KYC, no hassle, then go for bluffing. I also have a link in the description, in this case offering 10,000 in rewards depending on volume to the lowest fees. And still, have a look at the description because I have tons of different crypto products, including Trading Different, giving you a 15% discount. And until the 6th of November, tomorrow, they are on Cyber Monday offering huge discounts. And using the link in the description for Trading Different, you get 15% additional. I'll see you in the next one. Bye bye.